Hello, my name's Dave Emery. Welcome to Money Matters. Today we have a very interesting show. I would like to introduce my co-host, Richard Sichel. He's the Chief Investment Officer from Philadelphia Trust Company. Welcome, Richard.
Nice to see you.
Nice to see you.
Thanks.
So tell me a little bit about what you do at Philadelphia Trust.
Sure. We're an investment firm. We have trust powers also. We can be a trustee, but basically a wealth management company. We have about $2 billion under management. About half of it is with institutions such as pension plans, endowments, foundations, things like that. And the rest is high net worth individuals. And that could be IRA rollovers. Somebody retires, 401k, 403b. We'll roll it over and manage the money. It can just be regular money, if it's not some sort of tax advantage money, or it can be a trust relationship. And we've been in business since 1999. The name, and if you saw the logo, it looks like 1899.
Wow.
It was 1999. Yeah. And we have 20 plus employees. We're in Center City and manage stocks and bonds, and nothing very esoteric about what we do. We don't use mutual funds. We just use all individual stocks and bonds, and lots of client contact, and I'll be happy to expand on that a little bit.
That sounds good. Well, that's great. Well, we do a little bit differently. We're a comprehensive financial planning firm. The Marshall Financial Group is who I'm with. And we do manage money, but a lot of what we do is also helping clients build wealth through looking at things holistically, both with the investments, but also helping with tax planning, risk management, a number of different facets. So, so kind of similar. So, tell me, what are your clients seeing, or what are they talking about these days?
These days they're talking about oil, and when oil was $140 a barrel 7-8 years ago, they were talking about it then, and there were people predicting $200, and that didn't happen. And
now it's a lot less than $140 a barrel. That's for sure.
Much, and there were some people saying unbelievably low, which we think it is already, and I think one of the things that strikes everybody is when oil was 100 or 80, you'd say, well, we'd love it to be lower. Right. We would save money at the gas pump. Everybody would save money, but when you get an extreme like this, as you did with the high, as you did with very, very low now, it's not the best thing. So somewhere in the middle, whether that's 60, 70, 80, who knows, but it's just too low. So there's a lot of concern about that, and that comes by way of, is China really slowing down, and is world growth slowing, and the Saudis and everybody pumping oil like crazy, trying to hurt the fracking business in this country. So it's the big story, and when that one gets by, there will be another big story.
That's for sure. Yeah, with oil so low, just like you said, it's great at the gasoline pumps, but it definitely has a ripple effect through the economy. With in particular the energy companies having to, have had to shed employees.
Right.
So as we're going through 2016, what's your crystal ball say? What are people think? Your firm thinking about what's going to happen with the markets and the economies and things like that in general?
Yeah, that's always a good question.
Yeah.
And the crystal ball.
Right.
I'm still looking for it, but basically, we're relatively optimistic, which is easy to say, but we are. And we invest in U.S.-based companies only, and we're more optimistic because of that.
Right.
There are always opportunities of direct investment in other countries, and sometimes it's great, but when things turn around, watch out. So many of the companies we invest in are multinationals like Procter & Gamble. Right. They get half, 60, 70% of their revenues from overseas. So we're getting the growth
exposure,
that
but
way.
It just
right. And we just feel more comfortable doing it that way. We understand their accounting and trust them to whatever extent.
Stick with what you know.
Right.
Exactly.
Yeah.
Well,
and there are just such great things out to me. Tech is wonderful, healthcare is, and again, you have to be a long-term investor.
Right.
And sometimes we wear those two words out, especially when the market goes down a lot, but we think it provides opportunity, and you can't be sort of moving in and out of the market. It just doesn't work. It might work one time, but it won't work again.
That's right. Yeah, well, with the economy growing, but not, what are your thoughts on the whole interest rate environment too? I mean, it's in the end of 2015, the Federal Reserve did raise rates, and now here we are in 2016, and there's all kinds of speculation.
Right.
What are your thoughts on that?
Yeah, and the thing too is, depending on interest rates that you got used to over the years,
Right.
whether they were 5%, 8%, way back 14 or 20%, we're talking a quarter of a point, a half a point, 1%.
Very slow, it seems.
And
Feels.
it will be slow. The Fed will be very, very slow in raising the rate. So we don't think that people should be sort of lose confidence because of that. It won't hurt the economy to have the Fed raise rates very, very slowly. And the poor savers out there have been
not compensated.
They've been hurt.
Yeah.
And it's by design with the Fed. They want people to borrow, buy houses, buy cars, and mortgage rates and car loan rates are unbelievably low.
Exactly.
But for the people who spent their lifetime working and want to save some money, they're not getting anything at this point.
Yeah, I mean, I recently had heard that in 2015 the automotive industry had just a banner year.
Right.
And one of the biggest areas I had heard, which is a little disturbing, is that one of the largest portions of the buying public on that were subprime loans. So that's hopefully our economy continues to grow. When the subprime issue came to light, back in 2008. When the economy started to go down, and then the whole house of cards starts to, adjust.
Yeah, and you get the extremes, and obviously the 2008 experience. It was just, it was one of the worst periods ever for the economy, and a lot of it was based on just lending that got out of hand.
Right.
And if you could almost sign your name, you got a mortgage.
Exactly.
And then coming out of it, a couple of years later, almost nobody could get a mortgage. So it went from being just so open and just not even paying attention to detail to being too restrictive.
Right.
These days, it's still somewhat restrictive, which it should be. But if things and if car loans, sort of get people who can make one payment and hope for the best, that's not healthy either.
Yeah. So and the other thing recently, I heard an economist speaking, just the amount of cash that's on the sidelines, both on corporate balance sheets and even consumers, balance sheets have become very, much stronger than they had in the past. So the amount of cash is just sitting there making nothing.
Right.
My thought is, when that starts to migrate back into the market, you would think that's going to be a positive effect on the market.
It would be, and it should be, and when you hear that Apple has 150 billion or whatever, that's a fair amount of money, even at 0%. But it's you can't do anything with it. And the individual who has some money, they're getting nothing. So, and you would think also with gas prices coming down, that consumers would take that money right away, because supposedly every penny that it moves is $1 billion to the economy, one way or the other. And the consumer hasn't exactly run out and shopped. They're putting it in the so-called savings, getting nothing, or maybe paying some old debt.
Right.
So it's a mix there. But everybody thought that there would, the retail, the Christmas season would be a boom, and it was good, but not what you might think, because when you filled up your car before and paid $65 and now it's $37, pick a number, there's some extra money there.
Right. And you wonder where so some of it's maybe getting saved. I mean, maybe I think I also heard that some of the like restaurants, people are not putting in their gas tank, they're putting it in their
restaurant business is doing great,
putting it in their bellies.
Yeah, and that's typically the first place that people cut when they're having problems.
Right.
So you can talk to 2 people or 10, and you'll get half will say the consumer is doing terribly, the other half will say consumers are doing well, and they point to the restaurant business doing well, not just the McDonald's, but the higher price ones. So it's and maybe it depends on what political party you're in, what you say about how the consumer's doing.
But and then the other thing I also heard is the Millennium Generation. I mean that buying demographic, when they really start to use their buying power. And I've heard historically that, talking over the last handful of years, that demographic is going to be the one that really starts to move, move markets. I mean, it's a bigger demographic than baby boomers, and I think some of those that demographic, we maybe begin to see some of that type of movement.
Yeah, and that would help the economy, obviously. The more people working and maybe not living in the basement at home, as they say. In the job situation, again, too, you get two different opinions. The unemployment rate is only 5%. That's very low. But then there's other ways of looking at it where you can say, well, it's more like 10 or 11%.
Right.
So, again, there's some industries, if you're in tech or healthcare, finance, plenty of jobs. The industrial base is still suffering.
So, well, that's great. So we have mind to answer a question from the audience?
Oh, sure thing.
Okay. Jane Fowler from Pottstown wrote us, and she wants to know, what do you think about investing in MLPs at this time for the long-term investments? First of all, what is an MLP?
Well, let me think about it, but it's a master limited partnership.
Okay.
And it's a way that companies, typically the energy transport companies, and when the price is high, they make a lot of money. But they have to get 90% of their revenues from that, and then they have to pay basically almost all the money, 95% in dividends. So these companies pay high dividends.
Right.
But the problem can be is that if they have any reversal, that dividend that is 6, 8, 10, 12, 13% could be cut in half immediately, or the stock could move down that much in a day or two. So there are many proponents of that. We don't invest in them. We just think they're too risky. And
doesn't sound like a really even income stream if people are looking at for income.
No, and it just, the headline number sounds good.
Right.
If it's too good, watch it. So, we would rather see people be in, let's say, Verizon at a 5% yield. IBM has a 4% yield. Pfizer has a 4% yield. That's not 12, but it's a lot better than a savings account. And yes, these are stocks that can increase their dividends, and they do. And obviously, these are stocks that will fluctuate, but you can get good dividends that way. So we would recommend that versus MLPs.
And those companies seem to be, the industries they serve are much more diversified than a multiple MLP.
They're just much stronger companies, and you don't have to worry about the dividend. Where there you do, and that's why the dividend's so high. When something is that generous, there's a reason.
And I've also heard that MLPs, when you submit your taxes, you have to wait for
it's very complicated, right? It takes another month or two.
You may not be filing on April 15th.
Right.
So.
Very true. A little. If it's difficult to understand, and I think it is.
Yeah.
Try something else.
That's right. Okay. So if you want to send your questions in to Money Matters TV, this is how to do so.
You can have your questions answered on Money Matters. Please go to our website, money-matterstv.com. On our homepage, click on the banner on the right that says, Send us your questions. While you're on our website, you can find information about our host and guests, as well as show notes and links about this show and past shows. Money Matters is also available as a podcast on iTunes and Stitcher, so you can listen to Money Matters while you're on the go. That website address, again, is money, MONEY, -matters, MATTERS, TV.com.
Hi, we have a special guest today. Her name is Judi Green, and her company is Your Financial Analyst. I'd like to introduce Judi. Welcome to the show, Judi.
Thanks for having me here today. It's a pleasure to be here. Nice to meet you, Dave and Rich. So yes, my name is Judi Green, and the name of my company is Your Financial Analyst. And I specialize in helping people going through the process of divorce with their financial analysis and budgeting. And basically, it's to help my clients get a solid understanding of their current financial situation so they can make informed financial decisions during the divorce and to feel empowered to make smart decisions and negotiate their settlement with confidence.
Well, that's great. Fantastic. So when you have, do you work with couples, or is it just does just either the wife or the husband come to you?
It can, well,
Or it sounds like it's pretty much the wife then, more.
It can be both. I'll be
Okay.
gender neutral, but generally it's one spouse that
Mm-hmm.
comes to me, and it's usually the spouse that doesn't have a strong financial background to
Right.
do the numbers. Although I have had a spouse come to me that actually had a very strong financial background, but they just didn't want to spend the time and energy involved with pulling this data
Mm-hmm.
together. But I'm really part of a team of people. Generally, my clients work with a lawyer or possibly a mediator, and with a mediator, both spouses
Right.
would be present. And the lawyer or mediator, or if they have other professionals like a financial planner or a tax accountant as part of their team, they all need to have some great starting data in order to do the negotiations. They need to know what the couple has as far as assets and liabilities,
Right.
and what their current income is, as well as what they're spending.
Wow, sounds like a niche that really needs to be filled. Tell us a little bit maybe about the process that you go through.
Sure. Well, I meet with the client and we have a conversation to find out exactly what it is that they need. And I have developed some worksheets and checklists and spreadsheets that can help get the data that I need to help them in some sort of cohesive format, so to speak. So sometimes I'll have a client with like a mountain of papers and they don't even know where to begin. So I can help them organize that, and I give them a list of documents they could possibly find from me, whether it's a tax return or it could be a bank statement or a checkbook. It's all readily available information
Right.
to get that initial data. The big sort of nebulous part of it is coming up with their current expenses.
Right.
And that takes a little bit more work and research and data gathering to help understand what the client is currently spending. And I have this amazing 200 plus category
200
spreadsheet I could tell you more about. I
Wow.
know. I used to stay up at night trying to think, where else do you spend money? And basically, anytime you work with a lawyer or even a financial planner, they're going to give you a worksheet that says, write down your assets, write down what your expenses are. And what I found is the general categories are great, but there's so many little pieces of it that people overlook.
Right.
So, for example,
Yeah, what are some of the areas where you typically see people missing?
well, there's a lot.
I
So
bet.
even just most people will say, yes, I pay X dollars on a mortgage every month. I'll ask them the question, does that include your property taxes and your homeowner's insurance? And sometimes they know the answer and sometimes they don't.
Right.
So let's figure that out and write that down on your budget. Things like childcare or groceries or car expenses, again, the general topic is pretty broad, but within that, for example, the home maintenance and repairs. People might put in, $100, and then I'll sit there with my 200 category spreadsheet that I use to interview them,
Right.
and I'll say, well, okay, do you clean your gutters? Yes. How often? 3 times a year. How
Right.
much does that cost you? $150 or whatever it is. Pick a number. Do you have a deck in your backyard? Yes, I do. Do you have it power washed and restained every couple years? Yeah, I do. I didn't think about that. And these are the numbers that,
And they add
as
up.
I interview, it totally adds up. And I would say home maintenance and repair is probably the biggest area. People overlook things, or anything that's not on a consistent monthly
Right.
basis, something more sporadic. Even personal expenses, on a budget worksheet from your attorney, it might say, just personal. So you sit there, okay, well, yeah, I go to Starbucks or wherever, but what about your haircuts? What about if you have children? Birthday parties,
Right.
what do you
Going
spend
out to
on
lunch.
that? Going out to lunch. So there's,
Right.
I go through, and again, it's 200 categories. Many don't apply to
Right.
many people, but I customize it for
Judy,
every
can I-
client. Sorry.
We know Starbucks costs a lot.
Okay. Yes.
No, but it sounds incredible, all those questions.
Thank you.
And I guess it's correct. I mean, that's what you have to do. So, time somebody comes in, sits down,
Yes.
talks to you, and you get all that together. I mean, would that be a process that takes, I have no idea, 1 week, 1 month to get to say, here's
It
what you need?
depends. I usually try to have a shorter turnaround than that, and it can take anywhere from just a couple hours with the client to dozens of hours, depending on their situation. What I've learned is everyone's situation is unique. So Someone might not have a lot of different categories of spending, or it might just be a matter of taking a credit card statement and a checkbook or just interviewing them. But basically, I'll meet with them and give them some spreadsheets and tips and lists of assets and liabilities and stuff that we can help gather. And then going through the spreadsheet, I would say takes an hour, maybe two.
So you do walk them through it?
I walk them through it.
You don't say, here's a list, take this home and fill it out.
No, I walk
'cause that would
through
be-
it. No,
yeah,
and
that's good.
people don't. Most people, when it comes to budgeting, they want to stick their head in the sand. They don't want to know.
That's a lot of
And
work.
It's a lot of work,
And nobody wants to see what they're spending, what they're spending.
right.
from
And,
what can
I
see.
do want to say that I'm a judgment-free budgeter, so I don't care what you're spending your money on, and I'm not going to tell you don't go get that
Right.
latte. If that's what makes you happy, that's your priority. Let's just find out what it's costing you every month,
Right.
so you can make informed decisions going forward. And all this relates back to the divorce, in that you need to know what your spending habits are today in the divorce process in order to know where you're going to be post-divorce. And you know, if you don't know where you're going, you're not going to get there anytime soon. And this really helps give you information. The budget gives you awareness and knowledge and clarity and a way to focus on the financials, and then you can answer questions your lawyer
Right.
can, or your lawyer can help you answer questions such as, you know, what kind of alimony do I need? What have you been spending? What's your lifestyle?
Because if they don't do this correct, there's no do-over, is there?
Unfortunately, no.
So it's very important, it
Right.
sounds like, for them to get a handle on the expenses and basically the lifestyle that the divorcing parties are living.
That they hope
Correct.
that they can continue
Yeah,
to have.
exactly.
Right, and by people sort of winging it or doing ballpark numbers, that may work, but I had one client who said, oh, I have a pretty good handle on my expenses. So I said, okay, well, show me what you got. And then I went through my spreadsheet. And her budget number that she was giving to her attorney for her current household expenses was about half of what it should have been. So, you know, she was going in for a couple $1,000s. It was actually double. So now she had a better idea what she needed to negotiate for in her divorce as far as alimony is concerned. And she also could answer some of these questions. She was asking me, can I afford to stay in the house? I'm like, well, what do you spend on your house?
Right.
I don't know. Well, let's find that out
Right.
first, and then you can make an informed decision. And she ended up realizing, once she saw my numbers versus her numbers, she had to make some lifestyle changes post-divorce. But
Yeah.
it gave her that confidence to make those decisions.
How do these people find you? At what point
I can work.
of the divorce?
It can be really any. I've had a couple clients that are thinking about divorce, and they're just trying to get their ducks in a row beforehand. This one woman I'm currently working with, her husband has done all the financials, so she's sort of been covertly like getting copies
Right.
of stuff and just said, what do we have? She had no idea. So she hasn't even started the process yet, and I'm just helping her put together something that she can understand it. And there was some financial literacy involved with that, where I'm teaching her, well, this is what a
Neat.
budget is, this is what a net worth snapshot is. But then I can have people in the midst of divorce, even post-divorce. It's actually very helpful for, even if you didn't have my advice during
Right.
the divorce, post-divorce, it's very important to know to start your post-divorce life
Yeah.
on solid ground.
Yeah. Now, you talked about the expenses. Now, do you also help with the income side of things? I mean, I've heard stories where people don't always report all their income. I mean, are you able to help with any of that? That seems to be quite difficult, I would think.
It is, and I mean, there can be situations where a forensic accountant may have to be brought in, and I certainly, if I don't know how to do something, I work with a team of
Right.
people, whether it's a certified divorce financial analyst or like yourself, or a financial planner, but using certain data, like a tax return, I mean, that captures a lot of it. If they're hiding
Right.
stuff from Uncle Sam, it makes it a little
That's
harder.
tough.
And then I also do the net worth summary, which is basically what you own and what you owe,
Right.
to help people do that. And for some of my clients who don't have a strong financial background, I summarize what I gather for them in 4 simple terms. Money coming in, which is your income, money going out, which is your budget and your expenses, what you own, your assets, and what you owe,
Right.
your liabilities. And when you sort of put it in that framework, you can see a lot of people say, okay, this makes sense. So
sense
now
of
help me
relief.
get that snapshot.
Yeah.
And once we have that data, then they can go with it to their attorney. And I'm happy to work with an attorney with them, or a financial planner, or the tax accountant that they may need as well.
Well, that's good. Well, we have a couple minutes left in the show. Can you give us maybe a little bit of your background? I mean, how did you come
Sure.
into this?
Well, my background educationally, I have an engineering degree. I worked in corporate America for a number of years, and I got my MBA in finance. And I did corporate budgeting. So I have this extensive background. And then, most importantly, for what I'm doing today, is I'm divorced myself. And 10 years ago, I went through that process. Wow. And it's hard.
Sure.
And I remember emotionally, I knew how to do all this stuff, you know, like the back of my hand, but it took time and energy and focus. And I didn't really want to do it. And it was just, I had other priorities. I had small children, and I thought, oh my God, how do people without my background do this? Like, how do they pull it together? I did it, but I think my perspective of having gone through that, I have a lot of empathy what these people are going through, and I'm able to really help them and hold their hand and give them that peace of mind with what the documents I can produce for them.
Yeah. Well, it sounds like your background, all those pieces fitting together, give a good
perfect.
understanding as to why you arrived at where you are.
Right.
That's great. And I'm sure people going through divorce, I mean, that whole, gaining that level of confidence and comfort that coming through, that things are going to work out, is probably one of the big benefits.
So you're a psychologist also?
Not
little
by
bit.
training, but there is definitely a part of that, because
Right.
really, when people come to me, a lot of them are filled with fear. And what do I do? And the deer in the
Right.
headlights, and oh my God, how do I do this? I don't understand. I'm going to be taken advantage of. And really, I'm trying to give them, a sense of it's going to be okay,
Right.
and to help them get a fair settlement. And that's
Yep.
ultimately what it comes down to.
That's
I'm
right.
not trying to, skew the numbers a certain way. Like, these are the facts. Let's just get them together. All you can hope for is a fair settlement. Let the chips fall where they may, and then post-divorce, let me help you with a budget so you can start off feeling empowered about your financial situation, instead of this terrorized
Yeah.
feeling that a lot of
Absolutely.
my clients feel initially.
So if
you
some,
you have a
Sorry.
website?
yeah,
I
that's what was gonna
do.
say, too.
Okay.
Yeah.
Or an
Yes.
app? Do you have an app?
Yeah,
I
what-
don't have an app. I'm sorry, not yet. My website is Your Financial Analyst. And you can find out more information about me and my background and what I do on the website. That's YOURFINANCIALANALYST.
That sounds
I think I
great.
and I
great.
look forward to reaching out and helping people. I love what I do. I love helping them, so it's very exciting.
Well, great. Well, glad you came in as a guest here today.
It's my pleasure.
Wanted to alert everybody to next week's guest. Next week's guest is Adam Moscow. He's the president of Pivotal Business Solutions. So make sure to tune in for that. And remember, your money matters.